Good day, everyone. It's been a minute, so I'll be going very straight to the point and let's go. Today, I'll be talking more about market structure. And the truth is, market structure is the core concept to technical analysis. No matter any strategy you're trading, if you get the market structure wrongly, you will lose the trade. All right. So that's why I will be taking my time to really teach the intricacies to you understanding market structure. You hear people talk about directional bias or where's the market going to, where's the market coming from. You can't really understand those terminologies or those philosophies per se without you understanding market structure because I could tell you the market structure is bullish and you could be thinking it is bearish, and I could tell you it is bullish and I could also be wrong. But how can you know this for yourself without really understanding the intricacies that encompasses, the forex market structure? The last video I uploaded, I just gave an introduction for every beginner what a bullish, a bearish, a ranging, and a consolidating market structure is. And today I'll be going a little bit deeper, all right, a little bit deeper. And I like to make my things very practical so that we can be in one piece. Now, a little review of or a revision of the last course or the last video I uploaded. We have highs and lows like this, and we call it a bullish market structure, right? And then we have the one going opposite direction as a bearish. Then we have a sideways ranging, and then we have a lot of slow movement and plenty candles around a region, and we call that a consolidating market structure. Now let's go even more deeper now, so identifying it based on its true terms. Now, starting from the bullish market structure, one thing you have to know about this whole chart, let me bring the chart back. This whole chart is the market starts from the left hand side. That means it starts from this side, from the left hand side to the right hand side. All right. And this is the current price action now. And the left hand side is the price history. You understand? Why am I saying this? Is for a bullish market to start, you can't start drawing a bullish market like this. No, you can't draw it like this because you're drawing it like this. It's given this whole thought process that the market starting from the right hand and this is the current price history. Even when you draw it like this, if I don't say when you're drawing it, the first thing my mind subjects itself is this is the history or this is the beginning of the price action till it got to this point. That's the first thing I want to talk about. Now, secondly, in respect to market structure, we identify trends or the up or down movements as highs and lows. But nevertheless, here we have a specific terminology which we call the highs and the lows. What do I mean by that? Let me break it down. Now, it's obvious that this is a low, this is a high. Why? So this is lower and this is high. It's common sense. This is another low, this is another high, this is another low, this is another high. But if you look closely, each high is higher than the previous high, right? So this is why we call it higher highs. Now, don't be, well, I say, I don't even know the word to use, but let me break it down even more. I remember telling you this is a low, and I'll use L to identify it, and this is a high, right? Now, if you look at the bullish market structure, every high and every low is higher than the previous one. So we call this a higher low. Just as the term implies, this is a low, but this is a higher low. It is still a low, but it is higher than this. The same concept or the same thought process for this. This is a high, but we call this a higher high. All right, this is another low, but it is higher than this low, so we call this a higher low. You can't say higher low. You'll be complicating things. So this is the low, this is the origin, this is the high, this is the higher low, higher high, higher low, higher high, higher low, higher high, right? Higher low, higher high, higher low, higher high. That is it for a bullish market structure. All right, now identifying the bearish market structure, how does it work? The same thing. Remember, you're starting from the left. That is the origin. All right. This is it. Bearish means it is going down. It is falling. So for something to fall, it must be high first, right? So that's why I'm starting from here. You see something like this, another thing like this, 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 this. In as much as it won't be picture perfect on the charts like this, but you have to understand the prerequisites before the advanced stuff begins to come in play. So for this now, this is the high, right? You can't call it the low because it's starting from up to down. Why bullish starts from down to up? All right. So if this is the high, this should be the low. Now this is another high. All right, but this time this high is lower than this high, and this is another low, but this time this low is lower than this guy. So what do we call this here? It is a lower high, not higher low, lower high. And this here is a lower low. All right, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. All right, so the LH here is lower high. All right, why the LL is lower low. That's the terminology for it. All right, it's as simple as that. So now for the ranging markets, all right, the ranging markets can be a little bit complex. Sometimes you could just see something like this. You could see something like this. Remember, I told you guys that in respect to the ranging markets, just see it as market bouncing off a ceiling to a floor kind of thing. This is invincible. It doesn't mean shit, but it helps your mind create pictures and help you recall better the philosophy about why it is ranging. You understand? Now, how do you label this? It's most times we work with the low. All right. Yeah, you can see the low. You can see a high. You can see a higher low, right? A higher high. But you can see that the next one actually went below the previous higher low. So it can be very, very haphazard. And that is when I will bring you to the concept of a break of structure and a change in character. All right. Now, that is where we are going to. We have already identified higher highs and higher lows in a bullish market structure and lower highs and lower lows in a bearish market structure, then support and resistance in a ranging market structure. Now, let's talk about some concepts. What are the concepts? There is what we call a BOS. A BOS means a break of structure. A break of structure. Sorry, I'm using my mouse. I'm not using my light pen. So I've been faster. All right. So a break of structure is very simple. Let's say market is bullish, and remember the rules behind the bullishness is the highs, the new highs that is being formed should be higher than the previous ones, and the new lows that are being formed should be higher than the previous low. Now, when you have a scenario where a new low becomes lower than the previous low, and a new high becomes lower than the previous high, this process, this shift here is called the break of structure. That means the pattern has been distorted, all right, or the pattern has been broken. The rules here has been broken. That's what a break of structure is. In simple terms, that's what a break of structure is. Now, the only little confusions that really happen in our forex space is a lot of people tend to call these things different names. And to be honest, when I started out, it was not really like this. But as time goes on, I got to realize why a lot of people do that is they want to sound unique. Some also want to use it as a kind of manipulation to lure people into their community, into their, I don't know how to even buy their courses. All right. Because one thing about newbie traders is, or struggling traders is, once they are not getting it right or they are losing money, they feel most times is because they don't know enough. All right, they don't know enough. And when I will start really bringing some nuggets in respect to forex psychology, we will understand that better. Because there are times when you could be failing because you are not doing the right thing correctly, and that is when all these so-called mentors use different names to teach that same thing, but you will have to pay them before they will teach you. So the idea of using those names is to sound mysterious so that you will think why you are not profitable is that they know something you don't know. But at the end of the day, what you know is what they still know, but they know how to navigate it and how to make you gullible to pay and still end up the same place, not growing. And that is some of the issues we have in this space. But um back to our class now. All right, I've explained what is break of structure. Some people call it market structure shift. Some people call it SMS, shift in market structure. It's still the same thing. Some people will tell you no, it's not. Some people it's, but the idea is get the philosophy about it. When I say break, when I say market structure shift, it means the rule of higher highs should be respected and the new low should be higher than the previous low. When these theses are not respected, it is called a break. There's been a crack in what it's will I say, the normal prerequisites. Now, let's make it more practical. This is a low, this is a high. The rule is the new low should be higher than this, right? The new high should be higher than this guy. What do I mean by that? You can see, look at the height of this guy. The new high is higher than it, right? And you can see the height of this guy. The new low, right, is higher than this guy. Now, this new high that has been formed, the new high that comes after it is also higher than this guy. Look at this new low that was created, the previous low. The new low that was formed, right, is higher than this guy. You can see. So I won't want to waste our time too much, but I believe you get the point. So that's too much explanation will now not make this shit boring. All right, so I'll just draw it out. Right, the new low, high, right, low. All right, now I want to bring something to your understanding. From this low to this high, you see the straight line, this low to this high is called a range. All right, it's called a range. From this low to this high is called this, like this. Let me write it out here. It's called a range. A range, or you can say the distance between the 2 points. But in Forex terms, we call it a range. All right, then you can see the market retracing now, coming down and then going up again. This new low that I created to this new high is called another range. It's still the same term, range. This is also another range. This is also another range. This is also another range. And this is also another new range that is forming. The high here has not completely formed yet, but at least it is higher than this guy, right? Now, don't be confused. This is a range. This is a range. This is a range, right? This distance from the low to the high. All right, low to the high range, low to the high range, low to the high range. And the same thing for a bearish market thesis. The same thing. The high, the low to the high to the low. All right, is a range. From this high to this low is a range. 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 This high to the low is a range. All right. I turned it inversely. That's why this is looking like diagrams. But if you turn it inversely, it depicts the bearish side of it. So I have to do it two ways so that you will not be confused. You get it? So in other words, what I'm trying to say is, if this is a low, this point here is a low, and market goes up like this and creates a high here, this distance from the low to the high is what we call the range. Now, we have identified this as the low. We have identified this as the high. We have identified the distance as a range. Now, you know, market doesn't just go straight line like this, right? If you look at the chart, it's obvious. Look at this. Market doesn't go straight line. You can see, yes, for a while, market has been falling. You understand? But it has been doing something like this. You can see it has been doing something like that. That's what I'm trying to depict now. Market doesn't just do something like this. It does something like this, right? Good. Now, the process where market from this high comes down, but still following the rule of bullishness, of not, going below this low. The process of it coming down and then going up again to form a new low. This process is called a retracement. Retracement. Let me write it out so you know what I mean. Retrace. This is A, please. Retracement. Yep, that's the word. Where this new range here, from this low to this high, the process of markets coming low or coming down like it wants to go down just to form a new low or a new higher low here. This process, this second line here, is called a retracement. Some people will call it correction move. That's why I tell you it's not really about the name. Why is it coming down? It is so that a new low can be formed. All right. Then once the higher low is being formed, market goes up again. And for it to be confirmed bullish, it has to go higher than this guy, right, to form a new range here. You can see a higher low and a new higher high, right? Then market will give another retracement again. All right, market will give another retracement again. Trying to delete this thing. Market will give another retracement again. Now, you remember why it's coming to give a retracement, so that a new low can be formed here. All right, a new low, a higher low, and that is the beginning of another new range. All right, to something higher. All right, so the concept is, this is the origin of the low, this is the range, this is the retracement. Another origin, that's another higher low of a new range. This is the high, this is the retracement. Another one forms here, forming a high, and then you wait for a retracement. Now, there is a trick I want to teach you. If market is still straight line like this, you cannot call this a high yet or a higher high yet, because you might be thinking this exact point is the higher high, but markets could just continue going up like that till a retracement is formed, so that this upside will now look like a mountain before you can call this a new higher high. It is not that complicated. It honestly is not that complicated. So if now we have a higher low, a higher high, marking the new range, then we know that this retracement that is coming down, right, is to form another new origin of a new range. So what's a true range will automatically, where is my drawing? Okay, this is it. So what a true range will automatically look like is, for a bullish market structure, now you have the low, you have the high. Remember, you can continue going up. For this to be called a high, the retracement, you must see that retracement before you can call this a high. Because how else can you identify it? It could just be a straight line still going up. Do you get the point? So this is the low, this is the high, and then there is a retracement here. Let me use RE. Then the distance from this place to this place and the retracement is called a market range. A market range. It's as simple as that. Distance from the low to the high plus the retracement is called the range. Distance from low to high plus the retracement is called the range. Distance from low to high plus the retracement is called a range. So this is the range. A low, a high, the impulsive move, and the retracement. The fact that this is going up, all right, we call it an impulsive move. This is a retracement move. Impulsive retracement. Impulsive retracement. Now, you ask yourself, what's with all these too much names? It's not complex. You can label them, all right? It's not complex. With time, you will not really become, you won't stress your head. Impulsive, impulse, SE, impulsive move, retracement, RET. That's what forms a range. Now, I want to tell you why this is called an impulsive move and why this is called a retracement move. Now, mostly, if a market structure is bullish, right, the pattern it usually forms is, if a market structure is bullish, that time that it is going up usually goes up with speed. That's why we call it an impulsive move, like a force, an impulse, boom. Then when it is coming down, most times it used to come down slowly. That's why we call it a retracement move. It doesn't have much speed. You understand? It comes down slowly like this. And then once the low is created, that's the new origin of a new range, the market goes up with speed again. That's why we call this side, from the low to the high, the impulsive move. Why this is the retracement. Some people call it correction, but you get the point now. Now, too much talk. Let's go to air markets. All right. Sorry, I wanted to do something here. A minute, please. I'm trying to trade while I teach, so it's a crazy thing. So I'll be rounding it up so that I'll get down to business. Get down to business. La 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 la. La 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 la. 1 minute, I think the recording can be paused here. I don't even know. Alright, so let's go to a live chat to identify it. Alright. Good. Let me work with this guy. And let's see what we can make of it. Oh, this is interesting. Okay. Let's see, for example. You can see here market is going up, right? So we can say it is bullish. Market is going up, right? Good. You can use any place though. You can use any place. I just wanted using this one because it is the easiest to identify. All right, it is the easiest to identify. Now, look, a very simple way to help you on the identify market structure is, I've taught you this now using TradingView, right? You can favorite the line charts also, so that when you switch to line charts, you can see it makes it more cleaner. All right, what can you see? This is the low, the origin, right, of this move here. This is the low, this is the high, this is the higher low. You can see that this particular point did not go lower than this guy, right? It's as simple as that. Now you can see this is the higher high. Why didn't I mark this as the higher high? Why didn't I mark this? You can see this high was no higher than this plus, why I'm using this as the higher high. Now look at this guy, a higher low. All right, you see I didn't mark this as the higher low. This is also a higher low. All right, but based on the origin or the range, we can mark this out as this is the identified low. All right, so all this now, all this that happened here is the retracement phase. This is the impulsive move. This is the retracement phase. This is now the new impulsive move. All right, this is the retracement phase. This is the new impulsive move. Can you see? Now all these are the retracement phase. This is the new impulsive move. Can you see? All these are the retracement phase. This is the new impulsive move. Can you see that it is not as crystal clear or table, will I say textbook pattern, just the way I just drew the line like this? Can you see? So this is the origin, this is the low, this is the high, this is the higher low, right? You can see this is the new higher high, this is the retracement, this is the higher low, this is the higher high. Why? You can see all the higher highs are marking are higher than the previous one. This is the higher low. Can you see? You can mark any of the lows though, you understand? But the most important thing is they are still higher than this previous low. Can you see? Then this is the higher high, and this is the higher low, and this is the higher high. All right, so I'll be making it just bit by bit, nugget by nugget, so that you will not really have too much mental stress in respect to accumulating or assimilating everything all at once. Just little by little. All you have to do, watch the video over and over again and try to look at your charts and identify it. All right, identify it. You can always hit me up on my Telegram channel. It's there. You can hit me up on my Telegram channel. Let me see if I can share the Telegram screen so you can see for yourself. You can see for yourself, right? So this is my Telegram channel, Inside the Cave, 151 subscriber. All right, and this is my tag here, the midnight. All right, so you can share your reviews, your thought process. You can even mark it out and send to me. All right, and please, did I got this whole labeling thing correctly? Because I was trying to identify it on my chat, blase. And provided I'm chance, I'll be very quick to give you a response. So that will be the end of the class. Take care of yourself and enjoy the rest of your day. God bless you.